Welcome back to Primary Source China Investment. This week we're on show I-4. And the period between New Year's and the Lunar New Year is always a weird time in the market. And this year, China tech has really bounced. And also China in general has bounced. If we look at what's happened year to date, we see MCHI, KWEB, and even the CSI 300 ASHR all up between 8 and 15%. So that's really been a bullish start to the year. But before we get too excited, and maybe some new subscribers have not been following, if we pull a 2-year chart of this, we see that the market and these sectors are down hard. CSI 300 down 28%, KWEB down more than 50%. So let's not get too excited about the recent tick up. Large cap names have been down less, and we're going to circle back to that. But I'd like to get Peng Guo your thoughts on what's happened in the new year. Has anything changed? I mean, obviously zero COVID has changed, but is that going to be bullish for the remainder of the year? What's your initial thoughts?
I think right now is the same. It really start to change. And I think this month is still be the COVID, all the COVID related stuff. Maybe, but the market always expect the future. And also everybody just realize it's time to make the money. So no matter for the country, for the individual company, and everybody knows that. I think probably government and a lot of the policies, a lot of the actions, all the related how to get a recover, how to make up the losses in the past 3 years.
Yeah, it does look like people are willing something to happen, although there are still plenty of headwinds, right? So officials are forecasting a 4.4 GDP for 2023, but fourth quarter this year, GDP probably dropped in real terms. And for the year, GDP in China is going to struggle to do 2.5%. Unemployment among the youth remains really high. COVID hasn't even peaked yet, probably won't peak until after Chinese New Year. And deposits are greater than loans by an amount we haven't seen since 1997. So people are not spending money. So we have a lot of conflicting news. We have a lot of hope, but we have a lot of macro headwinds as well.
That's right. And also, like the individual savings in China is already increased to the 1.2 trillion. 12 trillion. It's a pretty large number, probably to support the recovery.
What is that? You mean stimulus?
Yes, that's right. So they do have some of the savings, but in reality, they also facing the demand reduction from the global market, especially from the United States, Europe, and also entire global market. So right now they really stuck in the middle to stimulate the domestic market. Probably people don't have enough money or no confidence to consume. And the global market demand it also get reduced. So that also add a lot of the uncertainty on the recovery.
That's a huge theme going forward, right? We talked about this a lot, this sort of polarization or the splitting apart, but politicians that were very bullish on globalization are no longer in control. There's no doubt about that. And just this week, the U.S. formed a special select committee on strategic competition between the United States and the Chinese Communist Party. So clearly, they're going to be looking very closely at global firms with a big footprint in China, asking about data security and supply chain and business operations, particularly as it relates to high tech. But as we've talked about on this program in the past, that generally doesn't affect the usage of electricity in Chengdu, right? I mean, in other words, there's plenty of large value-centric firms on the mainland that don't carry this massive headline risk, and they're viewed as the backbone of the Chinese economy, right? I mean, just this week, we were talking offline, but we can circle back to it. The Communist Party, the government is asking for equity shares in the largest tech companies. And, while Alibaba might have a global name and brand, it employs 250,000 people, which is great. But guess what? China Agricultural Bank has a market cap of 4 times that and employs twice the amount of people. So there's also 5 banks that are equal in size. So there's tons of opportunity if we look past these headline names.
That's right. So that really means it's very hard for the entire market to get sorted. So you have to be very careful, select the sectors as well as select the company. So not everybody get a benefit from this recovery. Some of them should be the pioneer. That really rely on the fundamental research.
And also, I do think what you said earlier about, domestic demand. Yes, it's slow. It may be slow for consumer discretionary, but for staples, it's not going to change, right? You still need to use your phone, you still need to heat your home, you still need all of those things that make your household run. And all of those companies are large domestic enterprises.
Yeah, last time I said that travel sector
Yeah.
is the number one. So that is hopefully after COVID, and that's definitely number one sector to get a benefit.
Yeah, I think I think domestic travel in China, certainly. International travel is going to have probably some hiccups because there's going to be new policies put in place, and, traveling, internationally has been a headache for a lot of countries, not just not just those emerging from COVID. Certainly, there's going to be new requirements. Some countries are
Yeah.
going to demand, negative tests or proof of
But
vaccination.
if you see the long line to apply for the passport, you will know this is the engine.
Yeah, yeah, that's. But I do think there are some comments that those long lines for passports, there may be some long-term immigration aspirations from a lot of those people too.
It's still yeah, it's mixed situation. Yeah.
Yeah, it's a mixed situation. I
But
so
the bottom line is peace brings money. So if you see anyone shout very loudly and fight this, fight that, the only thing for sure is just will get a pull.
Yeah, I absolutely agree with that. And our job here is to look through a lot of the rhetoric. And when I keep looking through the rhetoric, I do see the domestic Chinese companies that have long-standing earnings, long-standing reputations, great brands domestically. Those are the companies that I would choose to be investing in. Those high-flying names, those names that have an international presence, they have a lot more headline risk than the domestic names.
Yeah, I totally agree.
Yeah. So we're going to leave it there for show I4. Thanks for tuning in. Like we said, it's kind of a weird time between the New Year's and the Lunar New Year, but we'll be back and looking forward to the Year of the Rabbit coming soon.
Thank you. Happy New Year.